This morning, I am pleased to introduce the first one-on-one chat of the day with a man who has been working to bridge the traditional finance world where he came from to the new world, or his new world, in the crypto space. Michael Novogratz, a former Goldman Sachs partner and legendary trader who founded Fortress's liquid markets business in 2002 before running their $10 billion global macro fund, is the founder, CEO, and chairman of Galaxy Digital, a cryptocurrency investment firm. In my research for this introduction, I learned that Michael's Bitcoin involvement actually started in 2013 when he began investing for his family office. And as the legend goes, he put $7 million of his own capital to work in Bitcoin when it was selling at around $100 a coin. So using my back of the envelope calculation, and I'm sure he sold some along the way, but that coin is worth about $630 million today. So I guess that does make one a legendary trader. Today, in a world that is rapidly digitizing, Michael continues to invest in Bitcoin and blockchain-related technology projects as he believes they will play a key role in financial markets in the future. Galaxy Digital has been referred to as the Goldman Sachs of crypto and is a leader in the crypto and blockchain world, which is becoming more institutional by the day. Here to interview Michael is Eric Schatzker, editor-at-large at Bloomberg TV. And I was actually Eric's guest on Market Makers with Stephanie Ruhle back in June of 2015. And Stephanie and Eric asked very tough but fair questions that day, but Eric was very nice to me on air. So, to repay that favor, if we could all give a warm welcome to Eric and Michael as they give our first talk of the day.
Morning, everybody. Bright-eyed and bushy-tailed. Some of you may have seen Mike Novogratz around the hotel last night. He was doing what any good speaker who shows up in Miami does. He was drinking herbal tea and going to bed early. I'm not going to have to jealously guard my water, am I, Mike?
No, you won't. Miami's on fire, I would tell you that much.
Here's where we'll begin. More people know you, Mike, as a crypto warrior than as a macro trader, but that's what you were, that's what you still are, a macro guy, running a macro book in your family office. Tell me, why do you see a beautiful intersection between macro and crypto?
So even when I first started in Bitcoin and Ethereum, and it's a speculative asset. And macro is really about being a speculator. It's trying to understand a trend and more buyers and sellers and why people are going to get turned on to an asset. Usually we look at inflation rates and growth rates, and you try to figure out on the margin, are things getting better or worse, and will capital flow in? And so when I first saw Bitcoin, I was like, wait a minute, here's an asset with a really cool technology. It came at a time when no one trusted the center, right? We were worried that JP Morgan was going to go out of business in 2008. We worried that Morgan Stanley or Goldman Sachs, wouldn't be around. And so the Bitcoin white paper came out really right after that crisis. And so when I got involved in 2012, we were right in the heart of the European crises. And so I was like, oh, here's this asset that is trustless. So you don't need to trust the central bank. At that point, central banks were printing money. We had just started the QE2, QE3, QE everything around the world. And so we're going to debase fiat currency. And Bitcoin really is made as a hard asset. There are only 21 million that'll ever be mined. And so I originally thought, what a beautiful speculative asset. The Chinese were starting to buy. There were these libertarians that loved it. There were anarchists that loved it. There were cypherpunks that loved it. And so once the Chinese started buying, I thought, okay, it's going to go up. And I bought it really as a speculative bet. And then the more I dug in, the more I realized that blockchain technology really will be transformative. So I started with macro. When I fast forward to today, and I look at the macro universe, right? We have 5% budget deficit in a country where we have 3.5% unemployment. We're growing at 2.5% to 3%. The last time we had those kind of statistics, we had a 1.5% budget surplus. So we have the craziest mix of monetary and fiscal that I've seen in my 30 years of looking at markets. That's why stocks are going higher, and I think stocks are going to continue to go higher. But when you have this sense of debasement of fiscal responsibility and a fiat currency, hard assets are going to go higher. So Ray Dalio wrote a beautiful paper, I think, maybe his best one ever, about why you should be long gold, probably 5 or 6 months ago. You know, Bitcoin has literally morphed into the new generation's digital gold. And I think every portfolio should have some gold in it, and it should have some Bitcoin in it. Why Bitcoin versus gold? Well, I'm a Bitcoin and gold guy, but I think Bitcoin because more and more people are slowly adopting it. The rails that are necessary to get the family offices and the registered investment advisor community to buy it are all being put in place. So it's custody at places like Fidelity or custody at the New York Stock Exchange that just started 3 months ago. If it's funds like the one we're selling, kind of an institutional Bitcoin fund, at one point it's going to be TD Ameritrade and Fidelity selling on their platforms. It's going to be an ETF. And so as we allow the 50 to 80-year-olds of the world to start buying it, limited supply, it's going to go higher.
You made some allusions just now to the kind of world we've been living in since 2009 at the very least. If you'd gone to sleep, Mike, in 2005, the pre-iPhone, pre-Facebook era, and woke up today, 15 years later, like Rip Van Winkle, right, to a world of record low unemployment, record high corporate profits, but at the same time, as you mentioned, a world of ultra easy money and massive fiscal stimulus, knowing nothing else, just having awoken after 15 years of slumber. What's the first trade you'd make?
So I'm trading now. I'm just waking up.
Just seeing all this.
Well, you'd be amazed.
What would you be rushing into or away from?
Well, what you would be amazed at. So like the internet bubble happened in 1999, and we didn't really start having the internet revolution until 2005 or 6 when you were talking about it, right? The iPhone, you couldn't watch a movie. And so, first of all, you would be overwhelmed with how much it's changed the world, right?
Wouldn't make sense, would it?
We date differently, we elect presidents differently. 40% of people find their spouses online now. That couldn't even comprehend that back then. And so I think you would sit there a little bit in awe. I would say there's a parallel between that shock, forget the monetary side, just the internet shock, and to blockchain. Like blockchain right now is, it's a great idea. The technology is not fast enough yet for it to be at scale. There are not enough use cases, and so people have kind of soured a little bit on the blockchain. But if you go to the corporate level, every single company literally on the planet is working on blockchain problems. And so I think in 5 or 6 years from now, we're going to look at the blockchain very similar to look at the internet with that Rip Van Winkle 15 years. And so I do think it's a plug for kind of blockchain venture and not to forget about the space. Listen, we had a speculative bubble that was crazy and it's crashed down. And now you can really separate Bitcoin as a cottage industry, as a digital gold. Well, that's not that sexy of an idea. It's a cool idea, and I think more young people get old, they're gonna feel very comfortable with it. The revolutionary idea is really around distributed trust and things built on blockchains. That's probably 5 to 6 years away when it really starts changing the world.
I think of you as forgive me, an old school macro guy who has discovered a new religion. Is that, am I wrong?
I've discovered a new weapon, right? So what do macro guys do? You look at the world and you say, how do I make money? We're not curing brain cancer. We're not even allocating capital to new companies mostly. We're like looking at the world and saying, what's going to happen and how can I make bets to make money? And Bitcoin, of all the cryptocurrencies, is now one of your weapons. So in my broad portfolio, I think stocks are going much higher because we are washed with liquidity. Credit spreads are so tight, I want to short credit spreads as a hedge. And I want to be long both Bitcoin and gold because I think we're going to have this continued debasement of fiat currencies. We have these giant deficits that need to be funded somehow. We've got Bernie Sanders who's surging, Donald Trump who is not going to be any more fiscally responsible in his second term if he gets elected than his first term. He loves spending money, and a Republican Party that's got a whole new religion, that's fiscal irresponsibility. And so, you know, as a macro guy, it's a wonderful weapon because it's a leveraged weapon in some respects. The blockchain side is more looking at kind of this tectonic shift in how databases are used and how you can change supply chains, you can make companies more efficient. When I originally talked about this, it was all about trust. Listen, there is something really radical. I'm less confident that the radicalness of the revolution, the crypto revolution, is going to happen, but I'm more confident that the efficiency and the new business systems are going to happen.
I want to set crypto aside for a moment. We'll come back to it.
Yep.
Talk about macro. By the way, we'll talk about a few other things too, and at the end, we'll have some time for your questions. So please think of some things that you'd like to ask Mike Novogratz. You said you think stocks are going to trade much higher.
I do. Listen, we have this phenomenal mix of fiscal and monetary that makes stocks hard to go down, right? You're spending about $13,000 a family in America with this Trump tax cut. Think about that. The average American family makes about $55,000 a year. $13,000 of it is being pumped in artificially. We should be at a budget surplus, or at least a flat budget right now, given where GDP is, and we're not. And so there's this sugar high going on. It's not going away. There's no chance that the Fed raises rates even if inflation comes higher in an election year. So you've got easy money, certainly through the election. You've got easy money all over the world. You have
another 30% year?
So much liquidity. I think when I look at like the Nikkei chart, if the Nikkei takes out 24,000, the Nikkei is going to be at 30,000 by the end of the year, right? And so you have these chart patterns even in Europe, which just breaking out the highs of the last 15 years, Japan, that really are explosive because they've really lagged the US. Japan's got an extra benefit that activism is finally showing. We talked about activism in Japan 10 years ago. It almost happened and it didn't. You're now really starting to see some activism in that country. And so add a little bit of that fundamental, you got the Olympics there, you got a chart, and you've got so much liquidity. I mean, the Japan Post has $4 trillion. And there's a huge move in Japan to move more into alternatives. The central bank continues to buy stocks. And so to me, it looks like we're set up for these parabolic moves. Now, what's unique, I think, right now, is that volatility is at an all-time low. And so you can buy October options in Japan or in Europe very cheaply. Same thing in the UK. And so when I look at like risk-reward bets, you know, having a lot of optionality to the upside in stocks, to me, makes a whole lot of sense. Now, listen, we have an election year. It's not going to go one direction. You know, Bernie Sanders is going to surge, and people are going to say, oh, shit, if he gets elected, the market's going down 30%. And so you'll have ups and downs, and then you'll have exogenous events like the flu we're dealing with now. But even the way the market trades, given this flu, this pandemic, which we're not out of the woods on, it's shocking how well the market trades given that. There is money that wants to be put to work. Bitcoin this year is up 31%. Now, that shocks me, actually, and I'm thrilled with it, because we're long a lot of Bitcoin. It shocks me that it's rallied that much. It's the best performing asset out there. There are two things that were positive. One is we had Iran, and Bitcoin rallied as a digital gold, and now we've got this nervousness around flu, and Bitcoin's rallying as a digital gold. And so it's starting to fulfill that role in people's portfolios. Right? I'd been really worried if those things happened and Bitcoin went down, I'd be like, oh shit, this whole story I've been telling isn't gonna work. But it is working. And so more surprising is all the other cryptos are rallying. I'm skeptical of the other ones rallying, to be honest. They don't make as much sense to me. But there's an enthusiasm. That enthusiasm comes back to there's too much liquidity in the world.
For some people, January of 2020 feels like January of 2008. Right? They're looking for something bad to happen. This clearly is not January of 2008 for you. It feels more like January of what year?
It's January of 1999.
99.
And remember, the S&P peaked January 1st of 2000, or whatever, January 2nd, the opening day, where you had the fireworks and the turn of the century and
millennium.
And that was it. And the NASDAQ 2 months later, right, whatever, March 20th, or 2.5 months later. We feel very similar to that. And I could literally see this spectacular last leg of the rally ending with Trump getting reelected. I hope not, but that would be a potential end. But it definitely feels like we're going into this last surge of this monster rally we've been on.
The liquidity that you speak of, the central bank liquidity, the liquidity injected into the markets by the fiscal stimulus is not exactly new. Why has it been so much harder for macro traders to make money than it did back in the days when you were at Goldman, for example, or when you were at Fortress?
So some of it is, with all this liquidity, volatility has collapsed. I bought some 1 year euro dollar, puts and calls volatility. It's the lowest it's been in 30 years. So you can buy, so the euro is trading about 110.50. You can buy a 110 1 year put for 1.25%. Like, okay, the forward's a couple points higher, but that's insanity to some degree. Well, why is that? Because we've had so much liquidity that, and the vol has come down and down and down in both interest rates and in currencies. And so you're at record low vol in interest rates and in currencies. Macro guys make money when there's volatility, and they make money in big trends. The only really big trend has been stocks higher. And so for a lot of guys, I mean, I talk to Paul Tudor Jones every day, it's completely an anathema to him to love to be long stocks. He loves to be short stocks, and so it's not that he can't be long stocks, but the DNA has been taking advantage of dislocation. And this has been one giant, bull trend, credit spreads tightening, stocks going higher.
So macro traders used to make money on volatility, and the rules of old macro were founded on the linkage between inflation and monetary policy, right? All that's changed since the financial crisis.
So this is the great question for all of you guys to answer. I mean, the most important question, is modern monetary theory a thing?
Yeah. Well, we're going to hear from the next panel, I think, that it is.
Is it a thing? Is it that we're getting old? I can't believe I'm 55 goddamn years old. You're all getting older every day. The country is getting older. We have too many old people. Old people consume less. That's a deflationary pressure. Mm-hmm. Technology is a deflationary pressure. The globalization was a deflationary pressure. And are we ever going to have inflation again? And so Trump's getting away with it right now, right? He's running a 5% budget deficit in the 10 years, 160 or 165. What worries me, and maybe I'm a skeptic, is that there's this thing called the Minsky moment in economics where confidence breaks all at once and you don't know when it's going to happen. So how far can we push? How far can we run? How big of a budget deficit can we get to 100% of GDP? Can we get to 150% of GDP before people say, shit, I don't trust anymore? And then you have a Venezuela as a real exaggeration. And so the only thing that's going to stop this paradigm that you're all investing in and getting wealthier every year is really inflation showing up. And it's inflation showing up and or people no longer trusting, right? And that's the gold. That's why Ray Dalio's got so much of his money in gold. And, I like Bitcoin.
But inflation isn't here, right?
Not yet.
PC deflator is what, 1.7%, I think? Something in that neighborhood?
So we might be in this environment forever. So what's the other way?
Right. So if in fact that's the case,
so what's the other way?
Inflation was the old game.
Yes.
What's the new game?
So
how do you win?
What's the other way it ends? At one point, it all gets priced in, right? The PE goes to what before you get nervous?
You tell me.
Why I think the market's going to give it one big leg higher. We're going to put valuations into levels that scares people. And we're not there yet, obviously. Otherwise, the market wouldn't trade as well. And so why I want to pay credit spreads, even though I think they're going to tighten, is because there's great optionality. They're not going to zero. There's great optionality, and they work in a crises. They also work in an economic slowdown. We still have some form of business cycle. Remember, we're only growing at 2.5%, 3% with 5% of GDP budget surplus. What's the next president? My big worry somewhat, I would love Bloomberg to get elected, and I kind of think Bloomberg gets elected, small probability, and market gets all excited, and then you want to sell the shit out of it because he's the only adult in the room. He's going to say, we can't run these budget deficits. We've got to cut spending and raise taxes. He's a very practical, centrist, pragmatic guy, and an old school. And so I don't think Trump is being a genius, stable genius, by running these deficits. I think he's doing it because it's fun. I don't think he thought, I can get away with this. But the reality is he's running these huge deficits and he's getting away with it right now. And at one point, my intuition is you got to pay the piper. And people have forgotten that.
So the conventional wisdom is wrong that a Trump re-election would be the best outcome for financial markets?
I think that will probably be the end of it, the surge. I think because as he's looking like he's going to get reelected, if he is, the market trades up into that and it'll be a buy the rumor, sell the fact.
You and I have had many conversations about crypto over the past 4 years. I remember the first time Mike told me over the phone that he was trading Bitcoin and Ether. I remember the moment you told me you'd bought a G550 after taking some coins off the table. That actually was the moment that the light bulb kind of went on for me. Like, goodness me, if Mike can make that much money trading crypto, then maybe this crypto thing is for real. I also remember one phrase that you employed pretty much every time we talked about crypto, and I think you know where I'm going here. The cavalry is coming. Right? And by the cavalry, you meant institutional demand for crypto and an institutional class ecosystem, right, to support it. Custody, asset management, trading. I see a few horses, but the cavalry.
All we've got is a few horses. I've been waiting for you guys all to get involved, and only a few of you. I mean, raise your hand if you own any crypto. Yeah, about
10% of the
15%, 10%. I'm trying to hype it to 15. It hasn't showed up yet.
Why?
It hasn't showed up yet because if you think of like pension funds to start with, they just move slowly. Fairfax County, I know because they've written about it, has invested in blockchain venture funds, but very few others have. And it's always you need market leaders. In the endowment world, Yale, Harvard, Stanford, UVA, University of Pennsylvania have all made investments in crypto venture and in some Bitcoin venture funds that own a bunch of Bitcoin. But it's only about 5% of endowments. I think the next big mover is the registered investment advisors. It still hasn't been easy. You can't call Fidelity and just say, buy me some Bitcoin. TD Ameritrade was about a week away from turning it on, which would have changed the game, and then Schwab bought Ameritrade, and that project is still on hold. I would tell you, it's happening, it's just happening slower. And so a year and a half ago, I was so excited about the New York Stock Exchange doing crypto custody and Fidelity, and it was supposed to happen last January, and they finally got their licenses last December. So we're only 2 months in to where the big institutional names will custody your Bitcoin. And so the plumbing that it takes for institutional quality investors to feel comfortable, to know if I make a bet on Bitcoin, and it goes up, I'm going to make money, but I'm not going to have lost my coins because they're stored at Fidelity or the New York Stock Exchange, is only now being put in place. What I've learned and trying to run my own business is it takes longer than you think to create all that infrastructure and that plumbing. The promising side is Bitcoin's at 9,300 without that, and so it's sneaking in, and it's being put in place. And because it's a hard asset, because there are not a lot of Bitcoins. I was thinking when he said there's $3.2 trillion of money in this room or in this building, 1% is 32 billion. Geez, if people put a 1% position, Bitcoin would triple. Prices are set on the margin and there's not that much liquidity in the thing. And so as people start allocating, and we're seeing it every day, we're seeing small trickles. We started this Bitcoin institutional fund, and every week a few more dollars come in. So it's happened a lot slower than I thought it would.
You've never been shy about shorting crypto if you thought it was, the charts spoke to you in such a way. Mm-hmm. Is that where they are now? Bitcoin up 30%, would you short it?
No, I wouldn't. I wouldn't actually. I think Bitcoin, something's happened this year that there's a new buying base that's sneaking in. It's not obvious where it's coming from. We see venture funds raising some money and putting some in Bitcoin. We see RIAs starting to put money in, but it's not a cavalry. But the way the price moves, the market doesn't feel like it wants to go down a lot. I would short some of the other altcoins. We've had some things rally 200% that I think are small communities that have, and I monitor market cap versus liquidity. And when I see something that all of a sudden has a $4 billion market cap, but you can only trade $3 million a day, it's a very dangerous short, but that's where I start shorting because it makes no sense to me. And so for this kind of room, I'd stick to Bitcoin and then some venture bets. The other cryptos, I'm selling.
How large a trade can the Bitcoin market absorb without moving the price substantially?
$100 million.
100 million.
Yeah, that would take 20 minutes to do gracefully without moving the price a lot. You might move the price 1%. Mm-hmm. And so over time, the Bitcoin's got $180 billion market cap now. And so you could think of it as a stock, and it's one of the 25 biggest stocks, right? It trades probably real liquidity about $1 billion a day.
So if you short some of the altcoins right now based on how far they've ripped thus far this year, help to answer one of the debates raging inside the crypto community, which is, will there be a real market, which is to say a market with real liquidity for any of those coins other than Bitcoin?
Yeah, but not many. I think Ethereum has a really good chance of being the trust level platform that you can program on. Right? So you have these protocols, EOS, Ethereum, Dfinity, Hashgraph. There are 30-odd protocols that all want to be what I'll call a global supercomputer that processes and authenticates information. That becomes the base level of trust. The future of the internet, Web 3.0 is going to be built on one of these protocols. It's not going to be built on Bitcoin because it's too hard to program on. Bitcoin's going to be digital gold. And that's a simple case. Bitcoin's already finished. It doesn't need to change to fulfill its destiny. These other things are years away from being finished, but the probability that one of them becomes that base level protocol and then gets some of that patina of store of value like Bitcoin, but also gets the use case that thousands and thousands of transactions per millisecond get processed on it, makes it a too compelling a story for people to walk away from. And so Ethereum probably is in that category. Most of the other protocols aren't.
There were two other stories, if you were, right? Libra, Facebook's coin, and Telegram. Libra fizzled, or is fizzling, and Telegram was stopped dead in its tracks by the SEC. How big a blow was that?
It was a big blow. I was actually out with the founder of Telegram recently, and he was frustrated, angry, didn't see it coming, right? Telegram literally did things by the book with SCAD and ARPs. They raised their money, and what happened was all the regulators kind of poo-pooed this whole space. I was on the Fed markets committee for 7 years, and I remember talking to the Fed. It was a fly on an elephant's butt. Not even a fly. It was like a middle fly on the elephant's butt. It was a cute little experiment. And all of a sudden, Facebook showed up and said, oh, by the way, we're going to have a cryptocurrency, and we have 2.5 billion users. And every single regulator had to check their shorts. They got scared, and they were like, stop everything. And so poor Telegram, if they had just gone a little earlier, they'd have launched, they'd have a cryptocurrency and a token. And quite frankly, they have 300 million users. So I was fascinated to see first experiment at scale. They still want to launch, and they're debating should they launch outside of the U.S. without the SEC, or they're trying to figure out, negotiate. We haven't had a scaled experiment yet. The other thing that Libra did, it woke everyone up to the fact that the real next revolution in payments is going to be a stable coin cryptocurrency revolution. It's not going to be Bitcoin or Libra. It's going to be a digital renminbi, but a crypto version of a renminbi, a digital euro, a digital dollar. And so there is going to be a revolution in payments. Now, why is that important? Because if you're investing like we are in the venture space, Visa, MasterCard, Square, all of these guys are going to help define what that is, but they're going to need blockchain experience, they're going to need custody, they're going to need trading. And so the infrastructure build around changing the way payments is going to happen is going to be monstrous. And there's a huge investment opportunity there. We're actually launching a venture fund solely focused at blockchain, not necessarily crypto. So half of it's really infrastructure of what we think the future will be. The US will probably be the slowest. China says within a year they will have a digital renminbi or a crypto renminbi. They want influence in the Mideast, they want influence in Africa, they want influence in Latin America. And so you're going to see a bit of an arms race. And it's not going to be using Bitcoin. Some places will use Bitcoin if their own currency sucks. If you're in Venezuela, there's high Bitcoin users, or even in Iran. But if you're in the US, you're going to be much more comfortable, buying and selling things with a crypto dollar.
In his introductory remarks, Patrick made reference to Galaxy Digital, your firm, having been likened to the Goldman Sachs of crypto. You told me once that you hoped it would be the Drexel of crypto. We should explain that, of course, right? Which Drexel created effectively the market for junk bonds, and if Galaxy Digital could do the same for crypto, that would be quite something, right?
We want to help credentialize the space, and it's happening. We're part of, I think, that process. We're certainly not the only part of the process. When I first started, it literally was seen as, a bunch of wackadoodles, gambling on these fantasy tokens. And, in 5 years, almost every major company has a blockchain effort and is taking this stuff seriously. Every single central bank is taking this seriously. Every single Ministry of Finance is taking it seriously. And so our goal is to continue to kind of be a bridge between the crypto community and the institutional community. The institutional community has been slow to embrace, but it's happening. And to profit from it by, with that insight, making bets, proprietary bets, and helping customers make bets on coins and on businesses.
So you've touched on a couple of your 5 businesses, right? You've got a prop book, you have a trading business, you have an asset management business, you have an investment banking business, and a venture business.
Yep.
How are they doing relative to one another?
So the businesses where we're using our capital to make bets, so being long Bitcoin and short Ripple last year was a great trade. Being long Bitcoin, that business is doing great. Our venture business is doing great. We've made good investments, and we think, kind of really cool companies. Some we've already, made profits on. Others, I think, are coming in the future. Our trading business, providing liquidity to customers, is not a great business right now. you've got Bitcoin and a few other currencies to trade. It would be like having a trading desk where you just trade dollar yen. We needed, in lots of ways, Telegram and Libra and other cryptos to be part of it. And so that business, it's growing slowly, but much slower than I thought it would be. And these are expensive businesses to run because, it's far more complicated than a currency business, given the fact that if you lose your crypto, it's gone, right? This is literally like physical.
How much of an issue is that? People know about Mt. Gox. They probably read about Quadriga. What was the last one? Bitfund Network.
And so it's becoming less of an issue because people are spending a fortune on making sure things get done right. So the two big costs of running this business is AML KYC, right? The fun of the crypto originally was like anyone could do it, and regulators said, no. We don't want money going to North Korea. We don't want, drug money in here. And so our AML KYC process is worse than Goldman Sachs, and all of crypto is becoming that way. So that's expensive. And making sure the security around connecting and where these tokens go is expensive. So Bitcoin or Ethereum, those protocols have never been hacked. It's literally impossible to kind of hack the Bitcoin protocol, but it's where they're stored and how they're transferred that you've got to be very careful about.
Do we have any questions in the audience for Mike Novogratz? If you have a question, put up your hand. We will get a mic your way. There's one right there.
Hi, good morning, Michael. Thanks for speaking this morning. I wanted to ask you what you think the three biggest existential risks are to Bitcoin. Quantum computing, regulators, or whatever it is.
It's a great question. I don't think it's quantum computing. Listen, quantum computing is going to come at one point in the future, and as it's being developed, the defenses to it will get developed simultaneously. They'll change some of the trust protocol to make it quantum resistant. And so I'm not a computer scientist, but all the great computer scientists I talk to, they de-stress that worry a lot. The biggest is regulation. Listen, Bitcoin's still only $170 billion. We have a $20 trillion economy. The global economy's $90 trillion. So it's still small. If it really took off, go up tenfold from here, all of a sudden every central bank starts saying, well, is this something we really need to worry about? There's a very small chance they could all say, let's just try to make it illegal. Now, that wouldn't kill it completely because a lot of people would give the middle finger and it would be a black market type thing, but it would hurt it immensely. Now, what does that mean, making it illegal? You have to go arrest somebody and put them in jail. I think it's a very tiny probability, but that's the existential threat. The other short-term not existential, the other short-term threat would be if one of the major players, all of a sudden, Coinbase woke up and there was a fraud there, and they were hacked for a ton. They're smart as heck guys, and there are multiple layers of protection there. And so could they get hacked and lose some money? Maybe, but it would be a very small amount of their assets.
Other questions for Mike Novogratz? There's a hand over here.
Hi, Mike. Mitchell Dong. What would it take for Bitcoin either to go to zero or to go 10x?
I think it is going to go 10x. It's just going to be a matter of time, and it's going to take you guys starting to put some in your portfolio. It's going to take, I'm leaving here to go speak at a conference of registered investment advisors. They're really the next wave of the cavalry, and they're just starting. And so as you listen, all the wealth in our country, and quite frankly in the world, is held by 50 to 80-year-olds. Like most 50 to 80-year-olds weren't like setting up red wallets and whipping crypto back and forth, right? It was a young person's revolution. I've got a bunch of Twitter followers because of crypto, and when I look at their profile, they're young and male. 85% of my Twitter followers are male, and 75% are under 35, right? That's not the people that have money. And so the money is 50, is old people. And as those guys start using this as the Ray Dalio argument that I need a hard asset that's diversifying, that's uncorrelated, and that has a story that's working. I see this thing, going up, for it to become gold, right? To have the same market cap as gold, assuming gold doesn't go down or goes up from here. So for it to have an $8 trillion market cap, it's 15 years at 30% a year. So the compounding effect gets there in time. So could it get up 10x? Yes. Could it go to zero? It's really hard for me to think it could go to zero. This has become a religion for a lot of people. They're just not going to sell. And could it go down? Of course it could, because prices get set on the margin. But there's a floor where people just aren't going to give up on this. And I say that because I've traveled the world, and there's still a Bitcoin conference a week where people are proselytizing. And you think about what a store of value is, right? Gold only has value because we say it has value. So it needs proselytizers. It needs people to tell you we think it's valuable. What's unique about the Bitcoin community outside of the other crypto communities is I can point to 20 billionaires, people who have huge influence in their community that made their money outside of crypto that love Bitcoin. Guys like Jack Dorsey or Pete Brigger from Fortress or Abby Johnson from Fidelity or Bill Miller, the old Legg Mason guy who now runs, I think, just Bill Miller. Huge Bitcoin advocates. And so there's this army of people bringing new people into the community. Most of the other cryptos don't have that. They have a small army of people that made their money in that space. And so Bitcoin's unique in that. And so I don't really see it going to zero. Could it go back to 4,000? Yeah, if lots of shitty things happen and regulation hits it and there's a hack. But this is not, it might go to zero. It's just not going to.
People used to say there was an intrinsic floor price, and that was the cost of minting a new Bitcoin.
Yes, and that's where people price gold that way and say, what's the substitution value? I don't buy in that as much because this really is a story, right? It's just a story. What's so interesting when you start looking at currency and looking at the stores of value, there are very few stores of value, right? If you look at the periodic table, only gold has value because we say it does. Every other element has value because we use it, right? Copper's got a price because we're using copper to build all kinds of stuff, not because we're like, I'm going to hold some copper. And so very few things get blessed as store of value. And quite frankly, there's a religious piece to it, right? I mean, you think about gold, it was, this shiny metal from the gods. The Aztecs, the Incas, the ancient Egyptians believed it was some blessed. Bitcoin is kind of interesting in that it, in 11 years, was able to pull this off. I fundamentally think if we knew who Satoshi Nakamoto was, Bitcoin wouldn't be where it was. But it's this mystery around how did this piece of computer code 11 years later become worth $180 billion? And for a while, people were like, oh, this is the greatest fraud of all times. And all of a sudden now you're like, wait a minute, Pete Brigger is one of the shrewdest investors I've ever met. Abby Johnson is not a euphoric, she's a very sober, methodical business builder and investor, right? So we're not fooling anyone anymore. This is now a store of value. It's being accumulated, and it's going to continue to be accumulated. And there's a magic to that.
I want to finish our conversation by asking you a question about something else you're involved in. The guy who made his reputation and his fortune as a macro trader, you discovered the new weapon, as you described it, in Bitcoin and crypto. And this may be news to some of you folks. What is it that appeals to you so much, Mike, about psychedelics?
Sometimes you just get lucky. I had a guy come into my office and make me a pitch about how psilocybin or magic mushrooms could cure depression, and he sounded really compelling. And I had a friend that was really into a great investor friend of mine was really into it. I said, listen, if you can get my buddy Christian to invest, I'll invest with you. And so we stood up this company called Compass Pathways, me, Christian Angemeyer, and Peter Thiel. And like anything, you start making money in something and you dig in. And, Compass is probably going to go public this year with a real positive story that I think will then end up being a bubble just like cannabis first was. And so Harvard, Johns Hopkins, 13 hospitals around the United States, 4 in Europe are all doing studies of using psilocybin to deal with depression. And the results are staggering. It also is staggering on obesity, addiction. And so there's a new awakening that these old drugs, these old plants,
Magic mushrooms.
Magic mushrooms, or ayahuasca, or iboga root from Africa, have real positive medicinal and therapeutic. And so, listen, I encourage all of you guys to in the right environment to go through. It's an unbelievable experience in terms of therapy, in terms of trauma relief. And so it went from being wacko hippies to, the VA. We're funding a study, and John Griffin from, who's one of the great investors. I probably should have asked him before I threw his name out there. Funding a study at the VA using, MDMA and psilocybin to deal with PTSDs. And so this isn't like, hokey hippies. This is real medicine with real people, and I am positive this will be the next kind of, short-term bubble, because it's such a powerful story. And the moment people look at the research, the doctors at NYU who were doing this, they were like, this is the best drug we've ever seen. And I was like, I don't really want to say it that way, but the results are staggering. There was an article today in the paper about it.
Before we exit the stage, Ron mentioned to me that he wanted to come on and do something.
If we could just keep you on stage for 1 second. Can you guys run the clip?
Nouriel, Bitcoin's at 6,000 right now. If at Christmas time it's above 6,000, you have to wear a shirt that says, I love Bitcoin. And if it's below, I'll wear a shirt that says, Nouriel was right. Deal?
Now, he didn't take the bet. He stuttered. But on Christmas Eve, Bitcoin closed at $7,275.16. So you clearly would have won the bet had he taken it. So we had a shirt made for you. I was right, Nouriel was wrong on Bitcoin. So there you go.
Thank you.
Thank you, sir. Thanks for being here.
Ladies and gentlemen, Mike Novogratz.
Thank you.